Good morning. Welcome to your daily solo 401k webinar Q&A session with my solo 401k financial. We help you to stop overpaying taxes and start building real retirement wealth. Today's topic is not like solo 401k providers who hold your money. With my solo 401k financial, you get to choose where to hold your funds at for the plan, whether your local bank, a big bank, regional bank, or even a brokerage firm, whether Fidelity, Schwab, Altruist, really any bank or brokerage firm that you want to work with. So in short, here at my solo 401k financial, you get to choose where to hold your funds at. At the end of the day, it's your funds. Therefore, you should choose where to hold your funds at. So we're going to go ahead and cover this topic and also ask questions. So this is your chance to ask questions on today's topic or any other topic regarding solo 401ks and even self-directed IRAs for that matter. Go ahead and type them over and we'll be sure to get to them all. Looks like we already have a number of questions lined up here on the queue. We'll look at those as well. Let's take a look at one now. We are a 3-member LLC partnership and apply to establish a solo 401k, but the application asks for 2 names. Our understanding is that the documents are generated automatically upon payment. Will there be a way to include a 3rd member in the documentation? Go ahead and email us the 3rd member, and we'll make sure to add that 3rd member. As a matter of fact, I think I may have responded to your email. Take a look at your email because your name sounds very familiar. So take a look at that email I sent to you a couple days ago where we asked to go ahead and provide that 3rd member. If you haven't, go ahead and send an email, reply to that email and include the 3rd partner's name. And that's how we're going to know. So thanks for your inquiry there. Okay, let's see if we have some other questions here. Here's a question. I'm 74. I've got an S corporation. I pay myself a salary of 18 to 22,000 this year. I want to be able to max out my contribution to a newly opened solo 401k this year. My understanding is I can contribute 100% up to my W-2 amount, which is under the max employee contribution. In 2026, the employee max contribution limit is 24,000 plus catch-up. You're exactly right. When your self-employed business is taxed as an S corporation, contributions to the solo 401k plan are going to be based on your W-2 wages. What is more, if it's an employee contribution, it's a dollar for dollar calculation. So if you pay yourself at least $23,500 of W-2 wages from that S corporation for tax year 2025, yes, you'll be able to contribute the full $23,500 as a contribution to the plan. Obviously, you cannot contribute more than you make. So if you make under $23,500, then you're not going to be able to contribute the full amount. And you are correct. The contribution limits increased for tax year 2026. Now you can contribute up to $72,000 as the overall limit. That increased from $70,000 for 2025. The catch-up contribution increased from $7,500 to $8,000 for 2026. You also have the super catch-up contribution for those who are age 60 through 63. That one stayed the same at $11,250. So you are correct. Employee contributions, they're a dollar for dollar calculation, whereas employer profit sharing contributions, that's a percentage. If your self-employed business is taxed as an S corporation, then you would multiply the gross wages, box 1, by 25%. Obviously, you're not going to be able to contribute an employer contribution here because if you're making less than $23,500, then you don't even qualify to make the full employee contribution amount. But if you make Looks like you're saying you're making about $18,000. So you'll be able to contribute that entire $18,000 as an employee contribution for tax year 2025. If you make $22,000 of W-2 wages from your self-employed S corporation, then you can contribute the entire $22,000, for example. So you cannot contribute more than you make, and obviously you cannot contribute more than the overall contribution limit. Okay, let's take a look at some slides here, and then we'll come back and look at some more questions here. So obviously, in order to open a solo 401k, you have to be self-employed, and you cannot employ any non-owner full-time W-2 employees who work 1,000 hours or more in your business. You can always exclude anyone who is a contractor in your business or someone who's under age 21, regardless of how many hours they work. You can always exclude those who are under age 21. But if you do employ someone in your business who's working 1,000 hours or more and they're a W-2 employee who is not an owner in your business, then you would not qualify to open a solo 401k plan. So again, today's topic is how here at my solo 401k financial, we let you decide where to hold your funds at. That's unlike other solo 401k providers out there. Here we view it as being your funds. Therefore, you should choose where to hold the funds at, whether at your local bank, credit union, or a brokerage firm like Fidelity or Schwab or any other brokerage firm for that matter. So there's the solo 401k plan document provider. That's where we come into play. We provide a custom solo 401k plan that allows for the mega backdoor Roth, for example, participant loans, alternative investments, equities, and of course, it comes with the $1,500 auto contribution credit. So if you use a different solo 401k provider, oftentimes they'll make you use their own brokerage firm or their own bank, and they may be receiving some type of referral fee as a result or some type of commission. So that could add more expenses to your plan. Well, not here, because again, here in my solo 401k financial, you get to choose. So we don't get any type of referral fees or kickback fees from anyone. And you may end up operating inside their system, whereas you may want to have your funds at a different bank or at a brokerage firm like Fidelity or Schwab, as I mentioned. And this could be a big issue because the provider that you go with, and they're using some financial institution that may not be a well-established financial institution, they might be relatively new. What if they go under? What's going to happen to your funds? Well, with my solo 401k financial, you get to choose the financial institution to hold your funds, whether Schwab or Fidelity, as I mentioned. So we never have access to your funds. Only you will have access to your funds. And oftentimes, if you use the other provider and their financial institution, they may not allow you to work with your financial advisor, especially if you want to have an advisor on your account. We have a lot of institutional clients which are advisors that use our services for their clients, and they cleared through Fidelity, Altruist, Schwab on the institutional side. So bottom line is that with my solo 401k financial, you're not tied to any particular bank or brokerage firm. You get to choose the brokerage firm. So that's the solo 401k difference when you utilize my solo 401k financial, is that we don't hold your funds. Therefore, we never have access to your money. We don't need access to your funds to help you with the compliance reporting and the plan support. So you choose your bank or brokerage firm. You control the account. So only you will have access to those funds, whether you use your local bank or a brokerage firm like Fidelity or Schwab. We provide the actual plan documents and the compliance support. So as the ongoing compliance support, our number one role in the eyes of the IRS is to be the solo 401k plan document provider, because in order to open a solo 401k plan and continue with the solo 401k plan, you need to have a solo 401k plan document provider. Well, we also include other services at no additional cost. We'll go ahead and prepare the Form 1099-R to report conversions, such as the mega backdoor Roth conversion, the conversion of pre-tax funds, the distributions, whether require minimum distributions, hardship distributions, normal distributions, transfers. Let's say you want to process a partial transfer from the solo 401k to an IRA, or you want to close the plan down, you have to file a Form 1099-R to formally close the plan. So we'll go ahead and prepare that Form 1099-R and file it with the government and provide you with a copy. Same thing with Form 5500 Easy. Once the market value of the solo 401k plan is greater than $250,000 as of the end of the plan year, for example, December 31st, then a Form 5500 Easy needs to be filed by the following year by July 31st. So if the balance of your solo 401k plan is greater than $250,000 in value as of December 31st of 2025, we'll prepare that Form 5500 Easy by July 31st of 2026 and file it electronically with the government. Keep in mind that both the Form 1099-R and Form 5500 Easy is included in our ongoing support and our annual fee, but you need to make sure that you communicate to us when you need to have the Form 1099-R or Form 5500 Easy prepared, because we don't have access to your funds. And if you go to the Forms tab of our website on the top right-hand corner, and you click on that, it'll take you to a page where you're going to see all the various distribution forms, conversion forms that you would fill out for Form 1099-R reporting assistance. There's also a link there if you want to be added to the Form 5500 Easy annual preparation list. So visit that tab. But again, as long as you timely request these services, we're not going to charge you any additional fees. You need to make sure you let us know when you need these services, because we don't hold your funds. So the only thing we don't do here at My Solo 401k Financial is sell investments or provide investment advice. We are solo 401k compliance plan providers and compliance experts. That's why a lot of our clients like to use our services to be the plan provider and for compliance reporting. Also, we have a lot of institutional clients as a result. Because again, you're going to control your funds, you're going to control your account, therefore you choose where to hold the funds at for the plan, and we provide the plan support and compliance support. Let's take a look at some more questions here. Here we go. My plan would be to do an $18,000 in employee contribution in the Roth 401k. Yes, you can contribute the employee contribution as a Roth Solo 401k contribution, plus the balance as after tax contributions, which I should immediately convert to the Roth 401k. That's correct. That's the purpose of the Mega Backdoor Roth, is to indirectly get more Roth Solo 401k funds into your plan. Since the salary is only $18,000, am I able to use the catch-up? No, you're not, because you cannot contribute more than you make. If you only report $18,000 of W-2 wages for tax year 2025, the maximum you can contribute would be $18,000 as employee contributions, and you cannot contribute any more than that. In order to contribute more than $18,000, you're going to have to pay yourself more W-2 wages from the S Corp. In other words, contributions to the solo 401k plan, when we're talking about an S corporation self-employed business, is driven by your W-2 wages. So you cannot contribute more than you make. Okay, let's see if we have some other questions here. Here's a question here. I am unable to get an EIN because the system gives me a reference to code 101. I spoke to the IRS over the phone and they said I have to fax and the SS4. Have you run into this before? Can I get a trust name? Can I get a new trust name? I'd like to open my bank account as soon as possible. Also, the question for the SS4 are slightly different. Do you have instructions for this? Good question. So yeah, this has happened before, and it has nothing to do with your plan name. For some reason, the IRS maybe is not matching up your name correctly, your legal name. There could be a number of issues, but yes, we have seen it happen before. Yes, you can complete that SS4 and submit it to the IRS. Keep in mind that you've already met the solo 401k deadline, so relax and enjoy the holidays. By signing the plan documents, your plan is effective immediately. It's when you sign the plan documents that determine if your plan is effective. So if you sign the plan documents by December 31st of 2025 or before, then the plan is effective for tax year 2025. As a result, you have until next year in 2026 to both get the EIN number, open up the holding accounts, and make the contributions. So it's the actual signature of the plan documents that determines when your plan is effective, because solo 401k plans are retirement trusts, which have legal documents. Just like all trusts, is the signature of the documents that determines when it's effective, not when you make contributions. What is more, when you're self-employed, you have until your business tax return due date plus timely filed extension to make employee contributions, employer contributions, and voluntary after-tax solo 401k contributions. We don't have a cheat sheet for how to fill out the SS4 form, but if you go ahead and prepare it and send it over to us, we'll be happy to look at it before you submit it to the IRS. But yes, that doesn't happen very often, but it typically happens because of some type of personal name issue and other factors. Okay. We'll be talking more about the solo 401k deadline here in a moment, but I can't stress enough that all you need to do is sign the plan documents, and you have until 2026 by your business tax return due date plus timely filed extension to make contributions and open the holding accounts and get the EIN number for the plan. The EIN system with the IRS actually goes down the last 4 or 5 days of December. So no one's going to be able to get an EIN number the last 4 or 5 days of December, but that doesn't mean you still cannot open a solo 401k plan so that it's effective for tax year 2025. Because again, all you need to do is sign the plan documents. And here at my solo 401k financial, we turn around the plan documents the same day. So you'll easily be able to meet that deadline, which is signing the plan documents. Here's a question. If your company moves to another state, will I be able to continue using the same solo 401k plan? It doesn't matter what state we're located in. We actually have a location here in California and one in Michigan. Solo 401k plans for establishment purposes fall at the federal level. We actually have clients all over the country. We even have clients overseas, especially expats, a lot of military individuals who are in the military that live overseas. They open solo 401k plan with us. So it's not where we're located that determines whether or not you can continue with the plan. It's whether or not you're self-employed. Self-employment is what drives whether or not you can continue with the plan. In other words, once your self-employed business closes, you're going to have to close the solo 401k plan down and transfer it to an IRA. Or if you hire full-time W-2 employees, you won't qualify for a solo 401k anymore, and you'll have to transfer it to an IRA or convert it to a full-time employer 401k plan. Are there any documentation or other related costs associated with such a plan migration? No. If you need to close your plan down because you're no longer self-employed or transfer it to an IRA, we would shepherd you through closing down the plan, including filing Form 1099-R and the final Form 5500 easy with the IRS, and that would be covered in our annual fee. Okay, let's take a look at some more questions here. I am just getting started and already have an account set up with Schwab, a rollover IRA account, Brokerage, and Roth contributory IRA. Will this impact my setting up a solo 401k with you guys and doing the mega backdoor Roth conversion? It will not, because a solo 401k, as you are probably aware already, is not an IRA. An IRA is an individual retirement arrangement, and you don't have to be self-employed to open an IRA. So yes, as long as you're self-employed and meet the eligibility requirements, then you can open a solo 401k plan. Many of our clients contribute to both their solo 401k and an IRA. And here at my solo 401k financial, you can choose to use Schwab to hold the solo 401k funds for the plan that we offer, and we'll prepare those Schwab brokerage forms for you as part of the whole setup process. And if you want to transfer any IRAs or former employer plans, we'll also shepherd you through that transfer process by preparing those applicable transfer forms. Keep in mind that the Mega Backdoor Roth Solo 401k plan is not impacted by any funds in any of your IRAs. You might be thinking of what's called the Backdoor Roth IRA. those backdoor Roth IRAs are impacted by other funds you have in an IRA. But the mega backdoor Roth solo 401k is not impacted at all by any of your IRA funds. What is more, we often find that individuals who are trying to process a backdoor Roth IRA, they'll go ahead and transfer their IRA funds in one IRA, including any gains, over to the solo 401k plan so that they can isolate the basis in that non-deductible IRA, and then they'll process a backdoor Roth IRA. We've actually put on several webinars on that topic. You can visit our YouTube channel where we have over 1,000 webinars for more information. And if this information is helping you feel more secure about your retirement, we would appreciate if you take a moment or so to like and subscribe, as it helps us to keep building this community and to help other solopreneurs find us. And we'll also make sure by subscribing to our channel, you'll also get notifications as to when we go live. We typically go live at least once a day, oftentimes twice a day, except during the heavy season. So if we have some other questions here. Here's another question. We have a two-party, myself and wife LLC, and trying to make a one-time year-end salary before year-end. Well, you don't need to do the contribution before year-end. Keep in mind that a solo 401k, and you can find out more information about this by looking at IRS publication number 560. There's a box, I think, on page 3 with a chart that specifically confirms that all solo 401k contributions, whether employee, employer, profit sharing, mega backdoor, whatever you're trying to do. So employee contributions, employer contributions, voluntary after-tax contributions, those can be made in 2026 by your business tax return due date plus timely filed extension for tax year 2025. So it doesn't have to be done in 2025. Why? Because a solo 401k plan is not a traditional 401k. Those rules apply to a traditional 401k, not a solo 401k with regards to having to make certain contributions by year end. So don't get confused. And as far as FICA and so forth, it's employer contributions that are not subject to FICA. And keep in mind, when you calculate the contributions to the solo 401k plan, and if your business is taxed as an S corporation, you're going to have to use box 1, your W-2 wages, the gross wages for the contribution calculation, whether employee, employer, or voluntary after-tax contribution. Let me send you over a cheat sheet on our website that talks about the rules that apply to contributions when your self-employed business is taxed as an S corp or C corp. Take a look at that right there. You can find out more information about the FICA there. There's the email to that link there. But again, you have plenty of time to make contributions to the solo 401k plan. They don't have to be made by December 31st. So enjoy your holidays while we're busy here working. Okay, let's take a look at some more questions here. Here's a follow-up question. Is it correct that because Schwab is holding the funds, I can make all my trades and rebalance of investments through their portal? That's exactly right. It would be just like if you open up one of Schwab's solo 401k plans or a personal brokerage account at Schwab or a brokerage account for your IRA. The only difference here is that my solo 401k financial is the one that's providing the solo 401k plan, which is more robust, and that it allows for the mega backdoor Roth strategy, participant loans, investing in equities, investing in private equity, real estate, crypto, and so forth. And it comes with the $1,500 auto contribution credit, but it's going to be the same architecture as any other Schwab brokerage account. You'll be able to invest in any stock, index fund, bonds, CDs. It's all open architecture, and you'll log in through Schwab systems. So And again, we don't have access to your funds. We don't need access to your funds to do what we need to do, which is to be the solo 401k plan document provider, which means that we process the plan updates with the government and to help you with compliance support for the plan, such as Form 1099-R and Form 5500 Easy Preparation, because we would collect that information from you by having you fill out a form, and that's how we would prepare those applicable returns for reporting with the government for your plan. So again, that's why we're so popular when compared to other providers out there. One, you get to choose where to hold your funds at. B, we don't have access to your funds. We don't need access to your funds. We don't want access to your funds. If we have access to your funds, that's more liability on us. We don't want to have that liability because we don't need that liability to do our job. Okay, give me a moment here. Let's see. Looks like we may have some more questions here. Looks like we got a question here. I have a question about section 1.01 and 2.02 of the trust agreement, which reference contributions from the company as a single member LLC, taxed as a sole proprietor. I plan to make employee contributions from my personal account and employer contribution from my business account. Does the trust require the trustee to accept participant contributions directly? If not, can I add addendum to allow this without conflict with any plan provisions or create an issue? Yeah, it's not that complicated. I think you might be, and I can understand, you might be overthinking it. Bottom line is that you can make contributions to the solo 401k plan, and if your business is taxed as a sole proprietorship, whether the contribution flows from your personal bank account or the business bank account doesn't matter. What ultimately matters is that you have the line 31 Schedule C net self-employment income to support the contribution, and then you have to subtract 1/2 of self-employment income tax from that figure. So no, the contributions do not need to flow from their personal business bank account. They can flow from either one. You just need to make sure you have the required self-employment income to support that contribution. As far as the trust agreement is concerned, no, it doesn't. The trust agreement does not need to be amended for you being able to make contributions, whether from your personal bank account or your business bank account. First time I've seen that question, and it probably hasn't come up with over 30,000 plus of our clients, just because it's not the trust agreement that drives whether or not you can contribute to the plan or not. It's the actual IRS regulations that drive the contribution rules. But good question regardless. Here's another question here. If my W-2 income is 70,000, can I contribute the whole amount using the mega backdoor strategy and pay taxes with personal funds? Great question. The answer is yes, if your self-employed business is taxed as an S corporation or as a C corporation. Because if it's taxed as a sole proprietorship or as a partnership, you're going to have to pay yourself more than $70,000, because unlike an S corporation or a C corporation, you have to subtract 1/2 of self-employment income tax from the net income figure when your business is taxed as a sole proprietorship or as a partnership. So assuming that you pay yourself at least $70,000 of W-2 wages for tax year 2025 and your business is taxed as an S corporation or a C corporation, the contributions will be based on your W-2 wages. You're going to look at box 1 of your W-2, the gross wages. And if you report at least $70,000, you'll be able to contribute that entire $70,000 to the voluntary after-tax solo 401k bucket, and then convert it to the Roth solo 401k bucket. So here is my solo 401k financial. Here's an example of a one participant plan. So this is a plan where someone is self-employed. They're the only ones in the business. In other words, they don't have a business partner, or their wife or husband is not working in the business. So in this case here, a one participant plan, we would help you to open up 3 separate holding accounts, whether bank accounts or brokerage accounts. Let's say you want to use Charles Schwab to hold your solo 401k funds. We would draft 3 sets of brokerage forms, one for the pre-tax solo 401k holding account, the second one for the Roth solo 401k holding account, and the third one for the voluntary after-tax solo 401k holding account. All these contribution sources are available within your plan. You're not required to open up all these buckets at once, especially if you're not planning to make any pre-tax contributions. You don't have to open that bucket. That doesn't mean you don't lose that ability, because our plan is already built or drafted with the capability of making all these contribution types. So you would make that $70,000 voluntary after-tax contribution to the voluntary after-tax brokerage account. You would then convert it to the Roth Solo 401k. You would then complete our form 1099-R request form on our website. If you go to the top right-hand corner and click on the Forms tab, that'll take you to the Forms library of our website. You would complete an online conversion form. We would collect the information, and then we would issue that form 1099-R, a copy sent to you and a copy filed with the government. And that's how the mega backdoor Roth Solo 401k is reported. Here's an example of a 2-participant plan. So both spouses are in the same business. So this would be a total of 6 holding accounts, 3 separate brokerage accounts for each spouse. It's still considered one plan because the plan is sponsored by the self-employed business, but the solo 401k is a defined contribution plan, and therefore you are required to have separate holding accounts for each participant. Hence why this slide here shows a total of 6 brokerage accounts. If you have 3 participants in the plan, let's say you got 3 business partners, then it would be a total of 9 brokerage accounts at Charles Schwab or Fidelity or whichever brokerage firm you use, because you have to have separate holding accounts for each participant and for each source of funds. As far as paying personal taxes, keep in mind that when you make contributions to the solo 401k as a voluntary after-tax contribution, you don't get a deduction for that contribution. So yes, you're going to have to pay taxes on those W-2 wages, and yes, you would pay taxes on those W-2 wages with your personal funds. Here's a question here. I'm a physician and do 1099 consulting work on the side with my W-2 day job. My 2025 earnings are around 50,000, but my expenses and I'll deduct are 30,000. Yeah, that's really gonna reduce your amount of net self-employment income if you're taxed as a sole proprietorship, because when you're a 1099 NEC contractor, you report that self-employment activity on a form Schedule C. And then for solo 401k contribution purposes is the net self-employment income figure after all expenses. So line 31 is going to be the starting figure for that calculation. I've already put away 23,500 pre-tax into my W-2 provided 401k as an employee. So I think I can only make the employer contribution to a 401k. You're exactly right. When you contribute to a daytime employer 401k and then your solo 401k because you're self-employed on the side, the employee contributions are aggregated between both 401k plans. However, employer profit sharing contributions are not. So even if you max out your employer contributions to your daytime job, you're still going to be able to make employer profit sharing contributions to your solo 401k plan. The same rule applies to voluntary after-tax solo 401k contributions. Those are not impacted by contributions to your daytime employer 401k. So if you had enough net self-employment income from your side business for 2025, you can contribute $70,000 in voluntary after-tax solo 401k contributions and convert that to the Roth Solo 401k, even if you've already maxed out all your contributions to your daytime employer 401k. So in short, only employee contributions are aggregated between your daytime employer 401k and your solo 401k. However, neither employer profit sharing contributions nor voluntary after-tax solo 401k contributions are impacted by your daytime job contributions to your 401k. So how much can you contribute? Well, if after you deduct 30,000 of expenses from that self-employed business, you're going to end up with about $20,000 of line 31 self-employment income. you would plug that $20,000 onto our solo 401k contribution calculator on our website, which will reduce that 20,000 by 1/2 of self-employment income tax. Let's say it drops it down to about $17,000. Then you can contribute 20% of $17,000 as an employer profit sharing contribution, because employer profit sharing contributions are always calculated as a percentage, and it's a 20% calculation if it's a sole proprietorship or a partnership. If your business was an S Corp or C Corp, it would be 25% of your W-2 wages. And that's because with an S Corp or C Corp self-employed business, you're not required to withhold 1/2 of self-employment income tax from that calculation when calculating contributions. And if you make it as an employer contribution, that's going to reduce your taxable income for the year. So you would multiply, let's say, 17,000 by 20%. That would be your employer contribution amount for the year. And we've done a lot of webinars on this topic. If you visit our video catalog on our YouTube channel, you can access full webinars on that topic. Obviously, I can't spend an hour on that topic here on December 16th, the busiest month of the year, but we do have recorded webinars, so hopefully that gives you a good overview. Are my post-tax contributions limited? Yes, all your contributions, whether post-tax or pre-tax, they're all driven by how much self-employment income you report. So you cannot contribute more than you make, and you also cannot contribute above the overall limit for the year. What is more, if you don't have enough self-employment income, you're not going to be able to maximize your contributions. It takes earned income from self-employment activity to justify the contributions. So if that's the case, max would be 18,000 as the employee contribution, and the remainder of 9,500 in after-tax contribution to max out the limit of 77,500. Well, again, you got to have enough net self-employment income to justify your contributions. If you're trying to get $77,500 into your solo 401k plan, and your business is taxed as an S corporation, you're going to have to pay yourself at least $77,500. And you can contribute 70,000 of that as a voluntary after-tax solo 401k contribution, convert it to the Roth solo 401k. You can make the catch-up contribution of $7,500 directly to the Roth solo 401k. Okay, let's see what else we have here. Does it make sense to do an IRA rollover when the 401k approaches 250,000 in funds in order to avoid dealing with the 5,500 paperwork? Well, number one, even if you do an IRA rollover, let's say that the value of your solo 401k plan is going to be $250,000 or more by December 31st of this year. And let's say you transfer $50,000 out to an IRA, you're still going to have to file a Form 5500 easy for tax year 2025, because that rollover amount that you transfer out of the solo 401k to an IRA is going to have to be included as part of the market value for the year. So the IRS is already on to that, for lack of better words, cute approach. But filing the 45500 easy should not be considered such a big deal, because the 45500 easy is an informational return. It's used to tell the IRS what the market value of your plan is. So here at my solo 401k financial, we'll prepare it for you as well. Also, keep in mind that if you want to transfer funds out of the solo 401k to an IRA, you have to meet an IRS statutory regulation, which means you have to be age 59 and a half or older. So that would be a triggering event. Or if you previously transferred IRAs or former employer plan funds to the solo 401k plan, those funds can be transferred out of the solo 401k plan to an IRA at any time. But if you make contributions to the plan, those have different rules. If you make employee contributions, for example, you cannot transfer those out of the plan until you're age 59 and a half or older. Now, don't confuse that rule if you're trying to process and make it back to a Roth solo 401k conversion. that rule doesn't apply. But if you're trying to transfer to a regular IRA, then that rule applies. So there are certain rules that apply. What is the best way to contact you to process the annual tax credit in 1099R? Well, you would complete the under the Forms tab of our website. You need to complete the Form 1099R request form. You complete that form, and we add you to the queue, and then we'll issue the Form 1099R early of 2026 for any conversion or distribution that occurs in 2025. As far as the tax credit, if you are a plan to sign up with this, if you are a client that opened a plan with us prior to December 31st of 2023, you can submit a support ticket and we can add the auto contribution credit to your plan. All other plans since then, the auto contribution has been automatically added to your plan. Keep in mind that the auto contribution credit didn't become available till January 1st of 2024 or after. But if you are an existing client from December 31st of 2024 and prior, December 31st of 2023 and prior, we can add that auto contribution credit to your plan. You would need to submit a support ticket and we can add that, and we can add the credit to your plan. Let me share a support ticket link to our website so you can submit that support ticket. Take a look at that support ticket right there. Okay, let's take a look at, let's get back to our presentation here. We'll look at some more questions here in a moment. Give me one moment here. So again, here at my solo 401k financial, we are not like other providers out there where they make you use them to hold their funds, or a financial institution that they are associated with. Here, we let you choose where to hold your funds at. It's your money, so you should decide where to hold your funds at. That's what today's topic has been about. So with my solo 401k financial, you choose where to hold the funds at. You're going to be able to process transactions at your pace. You're going to have investment flexibility, whether you want to invest in equities, stocks, like index funds as well, exchange traded funds, alternative investments like real estate, promissory notes, cryptocurrency, precious metals. The plan allows for solo 401k participant loans, the mega backdoor Roth strategy, and so forth. So the way the setup works is that we create a custom solo 401k plan with all the bells and whistles. We help you to open up the bank or brokerage accounts at the financial institution of your choice. You then make contributions and you make investments through that bank or brokerage account, and we're here to provide the compliance support and educational support. Now, the solo 401k setup deadline for 2025 for December 31st is fast approaching. But the good news is that you only have to do 3 steps by December 31st so that your solo 401k plan is effective for tax year 2025. So just 3 steps. You complete our online application. That's how we collect the information to prepare the plan documents, which we draft the same day. We email you a download link with the documents. You sign and you upload, and your plan is effective for tax year 2025. So you simply need to sign the plan documents, and your plan is effective. So the completion of these 3 steps by signing those documents means that you can open the bank accounts or brokerage accounts next year in 2026, as well as make contributions, whether employee, employer, or voluntary after-tax contributions, as well as obtaining the employer identification number for the solo 401k, which we'll obtain as part of the setup process. So again, just 3 steps, and you'll be able to preserve the right to make contributions for tax year 2025 and 2026 by your business tax return due date plus timely filed extension. So again, here's a further breakdown of those 3 steps. So the online application that you fill out doesn't take very long to fill out, maybe a minute. We collect information such as your name, your address, the name of your business, the name you want to use for the plan, and then we'll draft those plan documents. We'll email you the download link. You sign, and your plan is effective. So congratulations, your solo 401k plan is effective for tax year 2025 by simply signing those plan documents. So it's not when you make the contributions, it's not when you open the holding accounts, it's when you sign the plan documents, which are the legal plan documents, because the solo 401k is a retirement trust. And then next year, we can help you open up the bank account or brokerage account and make the contributions and help you calculate the contributions. If you're trying to break your neck and do it now, sure, we can help. We can also break our necks and try to help you get it set up now. But again, it's not a requirement that you open the holding accounts. Enjoy your holidays. Let us work hard here. So the auto contribution credit, the plan offered by my solo 401k financial comes with the auto contribution credit. Don't confuse the auto contribution credit with the tax credit. They're different. A solo 401k plan qualifies for the auto contribution credit, but not the tax credit. As a matter of fact, let me share a link to an article that we put together regarding the difference between the tax credit and the auto contribution credit that you can share with your CPA and tax professional. Give me a moment here. It compares the two. Let me share this link here. So take a look at the link right there that I just shared with you. And let's keep talking about the auto contribution credit. So with this $1,500 auto contribution credit, the cost to both open and maintain a solo 401k plan for years to come is practically free. It reduces your business taxable income on a dollar for dollar basis. Once we add the auto contribution credit to your plan, you can opt out of contributing and you can still contribute. Yes, you heard that right. You can opt out of contributing to the plan and you can still contribute as much as you want for the year up to the overall limit, which is $70,000 for tax year 2025. So you're not required to contribute to the plan by adding the auto contribution credit to your plan, nor are you required to contribute a certain amount, because you can opt out of contributing if you want, and you're still going to be able to contribute. You're going to claim this $1,500 credit over a 3-year period in $500 increments. For example, if you're an existing client and we add the auto contribution credit to your plan here in 2025, you can start claiming the $500 credit with your year 2025 taxes that are due next year. If you're a new client, same deal. You can start claiming the auto contribution credit with the 2025 year tax return due next year. So $500 for 3 consecutive years. So $500 in 2025, $500 for 2026, and $500 for 2027 tax return, for a total of $1,500. And you're going to file Form 8881, which is an attachment to your business tax return. We have a video walkthrough, a PowerPoint walkthrough as well. The form is a 2-page form. It doesn't take very long to fill out. So that's how the auto contribution credit works. See if we have some more questions here. Give me a moment here while I scroll through the questions. Thanks for this. Super efficient way to get these answers clearly. Thank you. I need to open the solo 401k and doing the backdoor Roth conversion before the end of 2025. But I still have until April 15th of 26 to fund it. So no, you don't have to do the mega backdoor Roth conversion in 2025. You simply need to sign the plan documents and your plan will be effective for tax year 2025. You can then open the bank or brokerage accounts in 2026, make the contributions, including voluntary after-tax solo 401k contributions in 2026 for 2025. You can also convert the voluntary after-tax solo 401k funds in 2026. Keep in mind that when you convert voluntary after-tax solo 401k funds to the Roth IRA, the Roth solo 401k, it's not a taxable event because those are after-tax funds. So whether those are converted in 2025 or 2026, it doesn't matter. Don't confuse the conversion rules with the contribution rules. So bottom line is, if you're trying to process a mega backdoor Roth solo 401k for tax year 2025, all you need to do is sign the plan documents that we provide the same day. That will preserve the right for you to both open the bank or brokerage accounts in 2026 and make the contributions and process the mega backdoor Roth conversion. So you have plenty of time. And if we really want to get technical here, if all you're trying to do is process a mega backdoor Roth for 2025, you actually don't even have to open the plan now. Because if you're trying to open the plan by December 31st, that's really because you want to try to preserve the right to make employee contributions. If you want to make employer profit sharing contributions or voluntary after tax solo 401k contributions stemming from Secure Act 2.0, you have until your business tax return due date in 2026 plus timely filed extension to open a solo 401k plan so that you can make contributions for tax year 2025 that are voluntary after tax contributions or employer contributions. So technically, you have a lot of time. But if you're trying to preserve the right to make employee contributions, you do need to sign the plan documents by the end of the year. If you're an S corp or a LLC taxed as a partnership, for example, but not a sole proprietorship. But the sole proprietorship, you actually have until April 15 of 2026 to open the solo 401k plan so that you can make all contribution types, both employee contributions and employer contributions, as well as voluntary after-tax solo 401k contributions for tax year 2025. That also stems from the passage of Secure Act 2.0. So yes, all these Secure Act 1.0, 2.0 have really muddied up the waters regarding contribution rules and deadlines. But here at my solo 401k financial, we specialize in solo 401k plans, and we've been in business since 2009, so we understand the regulations very well. Okay. Let's see if we have a question, some other ones here. What is the process to set up a solo 401k now, then later want it to be self-directed? Well, our solo 401k plan is drafted to be self-directed or not self-directed. In short, you get to decide what to invest in. Self-directed means you choose to invest in anything allowed under the regulations. Under the solo 401k regulations, you can invest in alternative investments like real estate, precious metals, certain purity precious metals, cryptocurrency, private equity, promissory notes, tax liens, biaticals, it goes on and on. So that's what self-directed means. You can also choose just to invest in equities. So our plan is a fully directed plan. So you can direct it fully or partially. You get to choose. If my net income from S Corp in 2025 is only 5,000, should I wait till 2026 to open the solo 401k? Or do the credits justify opening it? Well, that's a good question for you and your CPA or financial advisor. But if you're looking for a opinion, then the $1,500 auto contribution credit, you can start taking it now and $500 increments starting in 2025. So it will reduce your it'll reduce your business taxable income. Also, if you make a $5,000 employee pre-tax contribution, then you would want to open the plan by December 31st of 2025, and that $5,000 will reduce your personal taxable income on your personal side on the Form 1040 if it's made as an employee contribution and if you make it as a pre-tax contribution. So you would save something. If you wait till 2026 to open it, you're not going to be able to make employee contributions. So as long as you sign those plan documents by December 31st of 2025, you can wait till 2026 to make those employee contributions. Otherwise, if you don't open the plan, that means sign the plan documents by December 31st of 2025, and you open it in 2026, you can make employer profit sharing contributions, but that would be 25% of that $5,000. You wouldn't be able to contribute the full $5,000 of an employee pre-tax contribution. So that'll give you something to chew on. Okay. Here's a question here. As far as the 401k employee contributions, if I were to close down my sole proprietorship at some point in the future, would a rollover still be a triggering event if I'm no longer employed by the sole proprietorship? That's right. You're exactly right. That would be a triggering event, which means you could transfer the solo 401k plans to an IRA, and we would help you close the plan with the government by issuing a Form 1099-R and a final Form 5500 easy. And that would be covered in our annual fee as long as you timely request it. Okay, I think we've gone through all your questions here. We've been on for almost an hour here. So that's it for today's solo 401k session. Thank you so much for investing your time with us. Your time is valuable and your retirement future is worth it. If you haven't yet, please like and subscribe so that we can keep building this community. We'll be back here again tomorrow with more crucial content. Until next time, have a great rest of the day.